Welcome to JLL Market Outlook, second quarter of 2023. Thailand economic recovery continued to take shape in 2Q23. As a key driver of GDP growth, tourism industry has influenced the expansion of private consumption and improved the consumer confidence index, respectively. Looking forward, exports are expected to recover in the second half of the year, while key interest rate has been recently adjusted to 2.25% to make sure that the inflation stays in the target. Experts anticipate there will be at least another hike in the cycle or more. According to JLL research, a significant number of land transactions was recorded in 2Q23, indicating positive sentiment from both local and international investors. The retail sector has seen a positive improvement in recent months, with robust leasing activities and positive demand from the inflow of international tenants, which mostly are from F&B industry. However, taking into account the supply growth within 2023, we expect a slight increase in vacancy rates. We also anticipate seeing more asset enhancement projects of regional shopping centers in decentralized submarket in Bangkok, which will essentially drive up the rental levels and capital values. Bangkok residential market has experienced a notable upturn as pre-sale rates improve. In addition, new completion of premium stocks, particularly in Sukhumvit area, will be the majority of the new supply toward the end of 2024. Upcoming projects have received a positive response with pre-sale rate averaging over 50%. We anticipated a decline in the unsold inventory, along with the gradual rise in both rental yields and capital values. Moving on to logistics sector, which has been one of the most sought-after asset classes regionally. We expect to see an influx of prime-grade supply in the second half of this year, developed and driven by existing dominant players. As a result, vacancy rate is expected to rise back to the levels we have seen prior to the e-commerce boom in 2018. However, we continue to see a firm occupiers' demand from key industry like e-commerce, 3PLs, and manufacturing sectors, seeking logistic property with higher and greener specification. This results in an increase in capital values and rental levels, with stabilizing market yields nationwide. Demand for Grade A office spaces in Bangkok remains high, with tenants seeking the best quality space available. Vacancy rate is expected to improve slightly toward the end of this year as new projects fill up. However, older assets will need to seek major renovation and green credentials in order to stay competitive. Thailand hospitality market is currently in good shape as tourist arrival exceeds expectation, as well as international investors showing positive signs to invest across key destinations in Thailand. However, the delay of Chinese tourists is deemed as a critical challenge for the hotel's operator. While hotel operators are introducing new brands to stand out from competitors to make sure the long-term competitiveness of their businesses. Looking toward the end of 2023, Thai economy is on a positive trajectory despite various economic and political uncertainties. The returns of tourist arrivals and relatively lower interest rate will underpin the growth of commercial real estate market, especially in Bangkok and key investment destinations across Thailand. Anticipated influx of new supply across multiple sectors will pose a significant challenge to landlord, developer, and occupier alike to act promptly in order to remain competitive in today's market.
In the first half of the year, we recorded 2 new Grade A office buildings in the city center. These projects added around 110,000 square meters to the market, with the total Grade A office stock reaching approximately 1.5 million square meters. Overall demand remained focused in flight to quality and flight to green trends. Net absorption in the past 6 months reached around 34,000 square meters, heavily skewed toward new projects with green certifications. Majority of those demand came from older assets in the same area. Despite this, The rest of the market witnessed flat to negative demand changes, and the Grade A vacancy rate remained high at 21%. In terms of rents, Grade A office buildings in city center with healthy occupancy adjust their rents upward. However, the overall market rent remained flat. Looking into the near future, we are expecting an increase in pre-leases as economic sentiment improves. Flight to quality trend should continue to dominate the market, and new leases should remain focused in new projects. Other projects should continue to seek major renovation and green credentials in order to stay competitive. With such competition, we foresee Grade A vacancy rate to remain high in the near term. In addition, these new Grade A projects command premium rents following their qualities and offerings. Therefore, we foresee the rental growth despite hyper-competitive environment.
Bangkok prime retail stock recorded at around 3.4 million square meters in the first half of 2023, accounted for half of total retail stock. With no new supply addition in the first half, the only new addition was after the full opening of Icon Siam Phase 2. However, 2023 is set to be a significant year for Bangkok retail market, with the largest annual supply in the past decade expected to complete by the end of this year. The market had received a positive response with the increase in consumer activity and tourism recovery. As a result, there has been an overall improvement in leasing activity, absorption rate, and occupancy rate. The strong demand continues focus on F&B tenants, especially international brands in both new branch and flagship store. Moreover, the market has seen a remarkable surge in the number of Mala hotpot restaurants, in both emergence of new brand and the expansion becoming a crucial factor in driving retail growth and attracting a larger customer base. At the same time, we witnessed tenant reshuffle strategy in some shopping centers. This includes relocating existing tenants or rezoning area to create cluster of similar tenants within the same zone, in order to enhance the overall tenant mix and improve the efficiency of the center. In terms of rent, well-managed centers located in strategic location experienced positive growth during this time. Looking ahead, there will be 4 new prime projects in the next 12 months, which will add around 200,000 square meters to the market. Despite the market recovery, the supply influx may drive vacancy level marginally upward in the near term and put pressure on aging assets to adapt and remain competitive in the market. Meanwhile, the premium rent in new supply is expected to drive market rents upward, along with the increase in capital value.
As of the first half of 2023, there were around 73,000 completed units in prime condominium market in Bangkok. This is due to the completion of around 230 units in the second quarter alone. No new projects were launched during the period, with Dom Convent being the latest introduced from previous quarter. In terms of market sentiment, prime gate condominium continue to improve, especially for previously launched projects, which received positive market response. This quarter, the sale rate of prime condominium increased slightly, particularly for projects in Thong Lo, Ekamai, and Siloam areas. We saw a sharp increase in sale rates due to the resumption of international travel. Foreign demand for condominium increased slightly. However, domestic demand will continue to be the main source during this time. Moving forward, around 2,400 units are scheduled to complete in the next 12 months. At that time, the total stock will rise to 75,400 units. In addition, we anticipate more new initiatives to be introduced this year, such as One Bangkok and Sunthariya. Overall, we expect the prime condominium market in Bangkok will continue to improve in the second half of 2023. We expect to see a rise in pre-sale activity and new launches, as well as a full rebound of foreign demand, not only from China but also internationally.
Large amount of supply has continued to enter the market in the second quarter of 2023, with over 180 square meters of warehouse space being completed during this period. This is considered a significant growth quarter-on-quarter. The supply came from 3 projects, which are the second phase of TIP 9 industrial project, Fraser Property Logistics 192, and WHA Mega Logistics Center on Teparak Road. By the end of the year, at least 2 more projects are expected to be completed, which are Alpha Rangsit and Alpha Bang Na Kilometers 19. While there are also multiple projects being developed by Bangkok Free Trade Zone. The supply influx that we have seen in the first half of 2023 have continued to drive the vacancy rate up to 10.8%, a slight increase from previous quarter. And with a strong supply pipeline in the second half of the year, we expect the vacancy rate to continue to rise. Despite that, average rent has marginally increased. This is mainly driven by the high rent of the current hotspots, as well as the rising development costs. Looking ahead, as more supply is expected to enter the market later this year, up until early 2024, we believe that the vacancy rate can peak up to 13%. However, we do not anticipate the rent decrease with the current high land and construction costs. Samut Prakan and Ayutthaya will continue to be the hotspots and perform well as they are strategic locations for distribution hub, while in the Eastern Economic Corridor, the growth of manufacturing activities will be the key to growth in the warehouse demand. And lastly, with the adoption of ESG policies, globally requiring companies to reduce their environmental impact, we expect to see the growth of green certified warehouse market in the next few years.
In the first half of 2023, Thailand has recorded approximately 13.6 million international tourist arrivals, increasing more than 400% year-on-year. This is roughly a third of what we have recorded for the full year of 2019. The recovery of airlift and delays of Chinese travelers coming to Thailand due to various difficulties will remain our key challenge for the rest of the year. We have seen that rates across the key markets in Thailand, including Bangkok, Phuket, Pattaya and Samui, exceeding the pre-COVID level, especially during the first few months of the year. Occupancy rates, on the other hand, are gradually recovering with the increase of international arrivals. However, with the expected return of mass tourism later this year, together with inventories returning to the market from renovated rooms and new hotels opening, we see that the ADR growth will normalize in early Q4. It is unlikely that we will see the spike in rate like in the last high season later this year, but natural growth is still expected. RevPAR is anticipated to continue increasing on the back of improved occupancy rather than the increase in rate like in the beginning of this year in most markets. Investors and hotel operators remain positive on the outlook of tourism in Thailand and still keen to invest and increase their presence here. 2023 hotel investment volume is expected to be healthy at around 10 billion baht. We have seen hotel operators introducing newer brands to the market to differentiate themselves in Thailand, where most of the core brands are already here. The key concerns that will linger in the market this year will be the high utility costs and workforce shortage that many hotel owners and operators have been facing. Yet, operations in many hotels have already adapted to that to become more efficient in running the hotel. Political volatility will also play a major role in the outlook of hospitality industry for the rest of this year. Overall, the hotel market in Thailand remains strong with a positive outlook as tourism recovers and interest from investors and developers remain high.